Welcome back to Asymmetric Investing. Today, I'm diving into the electric vehicle market. While everyone is talking about the EV revolution, there's some massive risks that are lurking beneath the surface that could derail the entire sector. We've all seen Tesla's meteoric rise, but the reality is that the EV landscape is changing extremely quickly. Tesla's EV sales just last quarter fell 8%. Competition is heating up. Some of the hype that is surrounding the industry is starting to fade. In this video, I'm going to expose some of the hidden risks in EV stocks that many investors are overlooking. Now, before I get to those risks, I do want to remind you to sign up for Asymmetric Investing, my newsletter. There's a link on the screen and a link in the show notes, and that's where you get full disclosure for my portfolio that's up 50% over the past year, more than doubling the market. And I also want to thank this video sponsor, FinChat, which is the platform that I'm going to be using to show all the charts here on Asymmetric Investing. They have a full suite of financial data, including amazing KPIs on over 100,000 stocks globally. If you want to see how many EVs Tesla sold last quarter, how quickly Rivian's margins are improving, they are the best source to find that. And you can get 2 weeks of FinChat Pro for free with my link below. And if you decide to upgrade, you'll get 15% off. So amazing deal. That is a product that I pay for myself. So incredible to have them here as a sponsor. First up, let's talk about electric vehicle growth. Now, while Tesla has been the undisputed king of the EV space for years, its dominance is really starting to slip. Just check out this graph. Tesla's growth is not only slowing, it went negative in 2024. In the US, Tesla is now under 50% market share. And who's taking market share? It's companies like Ford and General Motors. They are gaining momentum, growing extremely rapidly. Products like the Ford Mach-E, GM's Equinox EV are proving to be serious competition for even companies like Tesla. And they're just getting started with dozens of new launches expected in the next couple of years from both startups and the legacy automakers. So competition is heating up, but we also have the issue of government subsidies. And this is something I think we often overlook in the EV space. Remember, President Trump has said that they want to eliminate EV subsidies. And that could have a major impact on the bottom line of all of these EV companies. Even Tesla, who could go from being profitable to losing money just by losing those subsidies. Almost every EV company has been relying on government support, including things like the $6.6 billion loan guarantee that Rivian recently got, and the $7,500 EV tax credit that has helped boost sales. That's $7,500 that prices would have to increase just to keep margins where they are. And guess what? The EV space is just as price sensitive as traditional automobiles. So that's going to be money that's coming straight out of EV makers' pockets. If those subsidies disappear, it's very clear profitability is going to take a hit. And remember, most of these companies are not even profitable yet. Speaking of profitability, let's talk about margins. The theory for electric vehicles was that margins was going to be higher than traditional automakers, but that hasn't proven to be the case. Tesla's profit margins have been shrinking since they peaked during the pandemic. I think this was the one company that was a massive beneficiary during the pandemic. And it's not just Tesla. Lucid and Rivian are losing money on every single vehicle they sell. And this is really EV specific. General Motors is reporting really solid margins. Ford's margins are getting better. So ICE demand and ICE profitability is really good, while EV profitability is getting worse and worse. And I don't think this is going to get better because there is increased competition. Raw material costs are increasing, and price wars, particularly in China, are going to put pressure on the entire industry. This is a race to the bottom in a lot of ways, and that's going to squeeze profitability, making it harder for EV companies to survive. And speaking of that China pressure, in the fourth quarter of 2024, Tesla sold more vehicles in China than they did in either the US or Europe. So that pricing pressure that they're seeing in China is only going to get worse given their massive exposure there. The other thing is we have to learn from history. The current state of EVs reminds me a lot of what happened with the solar industry in the early 2010s. There was a massive boom in demand. Everybody was jumping on the bandwagon. Supply was coming onto the market at a really rapid rate. But oversupply led to falling prices because manufacturing is at the end of the day a supply and demand business. Most solar companies went bankrupt and investors in almost every single public stock lost money. Is the same thing going to happen in EVs? I think that's absolutely a real possibility, especially when you think about the valuation of most of these companies. Tesla is trading for 13 times sales when its legacy automaker competitors are trading for about 0.3 times sales. Rivian and Lucid have not proven the ability to make money. And unless you can make money in the EV business, the auto business is fundamentally about making a profit on all those billions of dollars that you invest. So if they can't prove that they can do that, there's not going to be a great future for these companies. The other thing to consider for these global companies is Chinese EV manufacturers. Companies like BYD and NIO are producing some amazing vehicles at really, really competitive prices we can't match here in the US. They're not really playing catch up anymore. They're actually leading and innovating, taking market share, particularly in China. That's actually going to hurt Tesla more than anybody else. Tesla sold more vehicles in China in the fourth quarter of 2024 than either in the US or in Europe. So this increased competition is already starting to put downward pressure on prices, and I think it's going to make it even harder for American EV companies to compete. Finally, let's talk about the great hope that is autonomous driving. Tesla's been a leader in this space for years, but the technology is becoming increasingly competitive. Every single automaker has a strategy for getting level 4 or level 5 fully autonomous vehicles on the roads by the end of the decade. The gap between the leaders and the laggards is really starting to close. That could erode Tesla's competitive advantage. It could mean that companies like Rivian and Lucid don't have any real competitive advantage in autonomy. If autonomy commoditizes, that means that the premium that a lot of these companies trade for just isn't worth it for investors. So what does all this mean for investors? I think it's time to be much more cautious about EV stocks. Of course, the EV revolution is going to continue. There's going to be more EVs on the road a decade from now than there is today. They're gaining market share, but that doesn't mean that it's going to be a smooth ride. And it doesn't mean that the companies are going to live up to their current valuations. There are massive risks involved, whether it's operating risk or policy risks that I think are going to hit in 2025. And those are crucial to be aware of before you invest your hard-earned money in EV stocks. So a couple of things to keep in mind as an investor. Don't put all your eggs in one basket. Diversification is going to be really important. Do your research in these companies. Dig into the financials. You have to be able to explain why a company is going to be able to have better margins than the competition, why they're going to be able to grow faster, and what their strategic advantage is. Also consider alternatives that maybe don't get quite as much attention. One of the companies that I recently added to the asymmetric portfolio is Mobileye. Mobileye is providing the technology for autonomous driving for a lot of the companies that are not in the EV space. So Volkswagen, Porsche, Audi, they are a technology partner that can leverage their investment in autonomous driving technology and sell it to dozens and dozens of automakers all around the world. They are already in hundreds of vehicles. And as we move to level 3, level 4, and ultimately level 5 autonomous driving, I think they are going to be an industry leader licensing their technology to other automakers, something that Tesla said they're going to do, but hasn't actually come to fruition. Mobileye is actually doing that today. That's why I think it's actually a better alternative at a much, much lower price. So while the EV market is exciting, it's also a minefield. Hopefully this helps you understand the risks of the industry. If you want more investment ideas, check out Asymmetric Investing. Like I said, a link on the screen and then a link in the show notes. Got a market beating portfolio there, and a lot of those stocks are actually associated with autonomous driving and the disruption that's going to happen to transportation in the future. Thanks for watching, everybody. We'll see you here next time.